Are you giving away your money? Are you paying tax and registration when you buy your vehicle at the dealership? Are you taking that money that you need to start your business and letting the dealer send it off to your local DMV, and then they add it to your loan and you're paying interest on that money that you should not be paying? You need to watch this video. Greetings, YouTube friends and family. Hope everyone's doing well. So if you read the, or if you heard the little intro there, some of you guys, especially hotshotters, are giving away a lot of money. And I think it boils down to, you know, when you first get into trucking, you are getting in by way of hotshot, because it's cheaper and easier. Let's face it. No offense to you guys, but sorry, I'm trying to make the seat a little more comfy. Anyway, so a lot of people get into the trucking business, and lately there's a lot of brand new carriers, because you guys think that Amazon's like the hot ticket, and that's your meal ticket. Personally, I don't think their loads are lucrative. I don't care for them. I know I do a lot of videos on Amazon because a lot of my viewers or subscribers, that's what they're asking for. But in reality, when I first started, you know, with the idea of creating this channel, it was more intended to like help people with just issues that come up for us truckers, and whether it's, you know, the operational stuff on the trucks or maintenance and minor repairs, stuff like that, all of these things that affect us. And so a lot of brand new carriers don't understand what IRP truly is and does. A lot of people look at it as, well, I gotta buy tags so I can go in all the states. That's part of it, but it's not the whole thing. And so it kind of works like this. When you run a non-IRP vehicle, so let's say it can be a higher gross vehicle weight vehicle that you're not going to cross state lines with, or it could be a lighter duty vehicle like a non-CDL box truck. When you go register those at your home state, you get charged. Start at the beginning. You purchase it, and you pay sales tax when you purchase it. And if you don't pay for it at the point of purchase, when you go to the DMV and title it, you show them your invoice or your bill of sale, and if it does not include sales tax from like an authorized dealer, then, you know, you have to pay the sales tax then in order for them to title your vehicle, and then you pay registration for you to get your tag. And so with commercial vehicles, on top of those fees, we also have to pay the weight rating. And so just about every state that I've ever heard of, you pay for anything above 10,000 pounds. So 10,000, like in California, you get little stickers on the side of the truck and it shows what your registered weight is. So 10, 15, 20, 25, 30, 40, 60, and I think there's a 65 and a 70 and then 80. Anyway, so those are the different weight classes, and you pay for them. So let's just say I buy myself a commercial motor vehicle, and I go pay sales tax on it, I pay registration on it, and if I go to leave my home state, every port of entry is going to want to charge me a fee similar to a registration fee to drive through their state, and that'll quickly add up to thousands of dollars. And so the system they came up with allows you to register once, and then you pay all the jurisdictions out of that registration, thus IRP. And so there's another component to that a lot of people don't understand. So when you purchase a vehicle, and I'm going to specifically talk about California because it's where I live, It's not where I purchase all my equipment, but it's where I live. And so I used to have another business where, we had to do quarterly sales tax filings because we had a resale permit. And so if you live in Southern California and you've ever been to Pico Rivera in the state has the highest sales tax. Back in the early 2000s when I was running my business, it was like 10.25. It may have gone up since. I haven't kept up with it. If one of you guys know and you post it down in the comments, I'm not going to argue with you because I haven't checked. But what ends up happening is when you go to the dealership and buy yourself a car, doesn't even have to be a commercial vehicle. Let's just say you go buy yourself a Honda Civic. It doesn't matter where you purchase the vehicle. They are going to charge you sales tax based on where you live, because technically that's where that vehicle will be consumed. That's the terminology used by the State Board of Equalization, which in California, that's who does your sales tax. So, okay, how does this differ, or why am I saying that you're paying sales tax for nothing? A component to IRP is that if you purchase a vehicle in any state, in any county, when you go to register it through IRP, you're not going to consume it at your house. That vehicle is going to be involved in interstate commerce, where you're going to travel through all the jurisdictions and it's going to be consumed there. And so your sales tax is then exempt from your purchase. They do not charge you sales tax. Your state does not. So the fee you pay when you pay IRP actually technically includes what they would refer to as a use tax, which is a way that you circumvent sales tax. Anyway, so when you go to pay your fee, it's a combination of vehicle registration, tax, and it's based on weight. So you cover all three items with one fee. Now, why don't we have to pay sales tax? Because we're going to be paying it through IRP. Why do I say people are paying double? Here you go. So let's just say I am a new carrier. I'm just getting into hotshot, and I walk down to the Ford dealership. Excuse me a sec. So I go down, and I'm not Ford biased. I'm just using Ford as an example. It could be whatever make you want. And so, okay, I go down to the Ford dealership, and I buy a $60,000 F-350. So the dealership does not deal with IRP. In fact, they can't. They cannot register your vehicle for apportioned tags. Only you can. So the dealership, when you sit down with them and negotiate, and they bring you that long contract that's like 3 pages long, but it's all one sheet, the yellow one, when they bring you that, they're going to have sales tax right on it, and they're going to have a title fee on it, and they're going to have a registration fee on it. Why? Because it's their intention, after you sign all your documents, the following business day, a representative from the dealership is going to go into your local Department of Motor Vehicles with yours and probably 10 or 15 others. They're going to register all these vehicles. Here's the problem. They're going to go register your vehicle as a regular in-state vehicle. They're going to charge you sales tax when you purchase the vehicle. They're going to charge you sales tax based on what city you live in. So I spoke of Pico Rivera at 10.25, and so let's just say you purchased a $60,000 truck. They're going to charge you over $6,000 in sales tax and add it to your contract. Then they're going to charge you a titling fee, typically $35, might be $55. I've purchased vehicles in a couple different states, so I can't tell you for sure. I know when I title trucks in Texas, the titling fee is $35. And so fine. When they go to register your vehicle, because you're telling them it's going to be a commercial, they're going to say, oh, well, you need to pay for a weight category. And you're going to tell them, oh, well, I'm going to be hot shotting and I'm going to be pulling a trailer, so the weight is 40,000 pounds. They're going to bill you for that. And so let's just say between the new sales tax and the registration and everything else, let's just say the registration comes out with the added weight. Let's just say it comes out to $1,500. So take that $1,500 and add it to the $6,000 they already charge you in sales tax. Now you're at $7,500. So that $7,500 is going to get added to your loan, and you're going to pay interest on that every single month. Now, it does not matter if you take that loan to maturity and you pay the vehicle off. The first couple of years are front-loaded with interest anyway. So you're paying all the interest on this vehicle, and you're paying for the interest on this tax and licensing fee you should not have paid. So how is this transaction supposed to go down? Kind of like this. You go in there and explain to them that the vehicle is going to be an apportioned registered vehicle. It is exempt from sales tax, and you do not want them to register it for you. Why don't you want them to register for you? They cannot register to your IRP account. They're going to go register it as a regular commercial in-state vehicle. And when you go to add your vehicle to your IRP account, or if you don't have one yet and you go to open it, when you add this truck, you don't get that money back from your state DMV. California will not give you that money back. They have a budget deficit. They can't fund their retirement or pension programs. I think they only have a few years left of funding for that. But California's in a mess, and they're not going to give you that money back. And even though you think, well, I already paid it to the DMV, they are two separate agencies altogether. Why? Because the DMV in California registers vehicles for revenue that stays in California. The apportioned DMV office is a part of IRP network. The money that goes to IRP through your state actually does not go to your state. It goes to IRP, and then IRP redistributes that money back to all of the jurisdictions where you are paying registration, and there's no sales tax there. So there's no refund. You don't get the money back. So the $7,500 that you spent went away. The state kept it, and I'm sure they are grateful, because now not only did they collect that $7,500 from you, when you go to register IRP, you're going to be paying them money every year also. And they're double dipping. They're going to get this money, and then the bank that financed your vehicle is charging you interest on this money, even though the money was a gift. Basically, you're gifting it to your state. And so add $7,500 to the price of your vehicle, or take $7,500 off the price of your vehicle. If you still have access to your contract when you purchase the vehicle, take a look at how much you paid in title, tax, and registration fees, and remove that from your contract, and then look at an amortization table. You can get that on either a website or an application downloaded to your phone. Most Excel spreadsheets have a built-in table, and punch in how much you paid for your truck, what the terms were. It'll show you what your payment is, and then punch in the difference without those figures and check out how much your difference is. That's all money you gave away, guys. That's money that you are donating to your state. And believe me, a lot of states need money, but I'm not one to give mine away. If you're buying bigger commercial vehicles, the commercial dealers know this system, they understand, and they're not going to be insistent to charge you all of these things. In fact, when I buy my trucks, I walk out of there with zero registration. I end up having to buy one-way trip permits to get them back home, Or if they're far away, I'll sometimes contract out, a third-party carrier where they stack these things and pull them down the highway. Their tags are a little bit different than ours because they're a drive-away, tow-away service, and so the one tag covers whatever they can stack, 3 or 4 vehicles rolling down the highway. Anyway, that is for all of you looking to get into this thing. Some of you guys that are already working and have IRP may not even be aware that there is a tax exemption built into this. And side note, it applies to your trailer acquisitions also. So if you purchase a $60,000 pickup truck, then you go purchase yourself a $20,000 gooseneck trailer, it's all tax exempt based on it being registered to you as the IRP registrant. That's really like the only requirement. Some states I have read you need to, after you get your IRP account, you use that IRP account to apply for it's like a resale number kind of thing. I don't remember which state it was. I want to say it was Pennsylvania had something like that. You have to apply for a separate document, and then you bring that certificate or document or provide the number to the dealer you're purchasing from, and then they'll know you have a legitimate exemption. The state of California doesn't require that. You basically tell them it's an IRP vehicle, and most auto dealerships should have someone, the person that handles their sales tax should be smart enough to be able to read and determine it. I've not seen a certificate, a resale certificate, which is typically what they call it, or a tax exemption certificate for California that's specific to IRP vehicles. Nonetheless, guys, if you're just getting started, if you're new to this, I know it's overwhelming. You've got so much to learn, even if you already know how to drive, even if you already have a CDL, if you've never operated commercially this way, IRP, IFTA, FMCSA, EIN, IRS, you've got all these things that you're trying to learn and get up to speed with. This is like one of the first steps where you make mistakes and you're giving away money. I would establish your IRP account before you bother buying a vehicle or getting registration. You can set up, even before you have a valid MC authority, you can set this up. What you do is you go to the FMCSA's website and you establish yourself as an exempt carrier, and so this will allow you to have a US DOT number that you can use to set up your new your registrant account for IRP. You do not have to have a motor carrier authority to have one. Basically, it's like you're either an exempt carrier or a private carrier, but you can get your account set up. Once you have your vehicle in place and you insure it and you do all that, then you send off your authority request. So if there's a few weeks or months in between when you purchase the truck versus when you're actually ready to hit the road, you want to have your IRP account set up first so that you don't spend $7,500 for nothing. I mean, that's what it is. I keep trying to bring up the point, and when I explain things to people, this business isn't so much about how much money you make. You can gross $15,000 a week, but if you only get to keep $14,800 of it, it's not worth it, right? You gross $15,000 a week and you get to keep $5,000 of it. Now you're a business. Now you're something viable. Anyway, it's not how much you make, it's how much you keep. And giving away $7,500 right when you're first starting out is the wrong way to start. Even if all that means is your truck payment is $300 cheaper a month, $300 times 12 is how much? How much are you going to be paying on that truck as an additional note, in addition to your note, I should say, as compared to no sales tax, not paying that registration fee twice, and then the added benefit, even for you guys that are going to lease on. A lot of you guys that are leasing on think that you shouldn't have your own IRP account. That's a mistake in my opinion. You should still go out and get yourself an IRP account. You can register as an exempt carrier, In fact, if you tell the FMCSA you plan on leasing on, but you're not going to be operating under your own authority, they will they can change your status to exempt, not for hire, and you can register all the vehicles you want through your IRP account. But what will happen is when you go to lease on with someone, they will send you a certificate of insurance listing your vehicle. You forward that on to your state, and then they'll issue you a cab card that shows you as the registrant, whatever your company name is, and the company you leased onto will be listed under the section where it says company responsible for safety. And so the advantage to that is you get to save all the sales tax and everything else. The other thing is you're not paying for your IRP tag based on where the carrier you leased onto sends all of their trucks. You're only going to pay for the states that you travel in. Most of us tend to find routes that we favor, and so we tend to go to the same states over and over again. And if you lease onto a bigger company, the big misconception is, oh, I'll save money because they're big. The problem is if they hit every single state every month, every year, the problem is you're going to end up paying higher registration based on where the other owner operators and company trucks go. That doesn't make sense for you. If you're kind of a West Coast regional or Southern regional, whatever you want to call it, if, for example, you hit California, Arizona, Nevada, New Mexico, and even Oregon, Oregon participates in IRP, just not IFTA. If you only hit those states, by the next year, your IRP registration cost will drop enough to only cover that. My other IRP account out of Texas, where we do oil field, we only run Texas and New Mexico, and what this means is my annual registration fee is $430 for a full-size semi. 80,000 pounds, $430. Why would I want to blend the two trucks, the two operations, where the trucks that only run two states have to pay for all the states that the over-the-road operation hits? That's, in my experience, that's why I'm running two different IRP accounts. Anyway, that is just something I wanted to share. It seems like a lot of people have questions or doubts, or they're just not aware of it. Wanted to throw that out there. If you guys have questions, you can post them down below. I'm trying to get caught back up answering questions and things like that. I've got several other videos that I have ideas and I just haven't had a chance to put them together. Anyways, as always, guys, thanks for watching.